Okay. Hello, everyone. Just checking that we have you in the room. If you can please chuck in the chat where you're coming in from and whether you've seen the other sessions, that would be awesome. And then we'll get going, won't we, Justin?
We will. How are you, Laura?
Good. What about yourself?
Yeah, very well. Very well. It's a beautiful sunny day here in Sydney.
It sure is. It's actually not too bad out here in Melbourne. It's a bit windy, but that's okay. All right, so let us know where you're tuning in from, and we'd love to know if you've seen the other previous parts. I can't believe it's part 3.
I know, week 3. Crazy.
That's it. And I'm excited about it because this is all about the cash flow. So hopefully everyone can come along with the ride.
Yeah, 100%. This is what it's all about. This is where the rubber meets the road.
That's it. Awesome. Just checking that we have people. Is the chat working?
Chat
hello. Yes.
To be working.
Rosalie, hello from Melbourne. Hi, Emily. Great. So fantastic. We've got the chat working. If you have a question that you're wanting answered, please pop that into the Q&A. It just makes it a lot easier for us to make sure we answer everything. And if we don't get to it throughout, we will have time at the end to answer any questions. So welcome. Hello. Great to see you all here. Let's jump on in.
Awesome. Well, let's run through. This is what we went through in part 1. So the world has shifted. We know we need to be as efficient as we possibly can to compete. Process. So Profit First by Mike Michalowicz created the process. Profit First Professionals Australia, New Zealand brought the people to Australia and New Zealand and educated them to create a better method. Thriday now brings the technology for optimal business outcomes with the process, the people, and the technology combined. Thriday does it all in one. Common financial mistakes that hijack business efficiency we went through. Trying to earn your way out of a hole, not knowing. You only know what you know. Not chasing invoices, not quoting fast enough, not negotiating terms. Part 1 continued, a lack of focus that actually gets you to your goal. Not understanding how your business is serving you rather than how you serve your business. And we know that mixing personal and business finances is a big no-no. Thinking all the money in the account is yours can lead to big dramas, and having all of your eggs in one basket, which I've got my own personal stories for, also can lead to a lot of pain and suffering. In part 2, we talked about preparing your business for financial stability. So why are you in business? What do you want to get out of it? What does success look like? What's your time frame? What's realistic? And what do you need to efficiently achieve the goals that you've identified? And guys, you can watch the replays, no problem at all, with all the detail. We're just skipping through so we can get really into the guts of it, because it's a big session today on how to actually pull it all together. Part 2 continued. We talked about the 4 pillars: business structure, legals and agreements, financial management, profitable products and services. Do you want to go into any detail on them, Laura?
Yeah, so we set a challenge for you last week, which was to identify one of the pillars that you think you could really improve on that could help you within your business success and efficiency. And so one of the pillars was the business structure, making sure that you were set up in a way that served your long-term goals, and made sure that you had assets protected and that sort of thing. And we went into quite a lot of detail around that. What legals and agreements you possibly could have more in your voice or in place when it comes to client agreements and setting expectations and that sort of thing. And then we did touch on the financial management that is Profit First, why it exists today, some general principles. And we did speak about the fact that if you're not 100% clear on whether your products and services are profitable, that there's a few things that you can do there. So I'd love to know if you picked a pillar and what you've done or learnt in this last week since accepting your challenge. That would be great. Pop it in the chat. Beautiful.
Awesome. And today we've got part 3, Cash flow optimization techniques to maintain momentum and stay ahead of the curve. And wouldn't it be nice if cash flow was a dam like that?
Yes, that would be amazing.
All right.
All right. This is a big question right here. What it actually means to optimize cash flow and how it improves business efficiency. And so I'm going to come at it from obviously the profit first perspective, but we can also go a bit broader to talk about how are they connected and that sort of thing. So I want to start by saying that a lot of, I guess, the mistakes that I see is that we have cash flow separate to business efficiency, when in actual fact, it is the framework that gives you the funds to be able to be more efficient within your business and invest in things and that sort of stuff. So what we're going to really target is how you can actually optimize your cash flow so that it improves your business efficiency. What are your thoughts, Justin?
Yeah, I agree 100%. But another layer to that, I guess, is how efficiently can you manage your cash flow? Like, how much time does it take you to, know the health of your business, understand where you sit in terms of your income and your expenses. So it's not only about efficiency in how much money you spend, but it's about efficiency in how you actually manage the whole process end to end, because it doesn't have to be difficult, doesn't have to take a huge amount of time. So that's what efficiency is all about.
Awesome. And I'd love to know in the chat whether you find the finance side of your business is time consuming. And I'm hoping that this part that we go through today is going to really help with that.
Yeah, I'd be surprised if a lot of people don't find it time consuming. It's one of the reasons why we started Thriday, and we interviewed thousands of businesses before we started, and that was one of the biggest challenges. So if it is time consuming for you, or it has been, you're not alone, believe me. There's many of you.
Yes, and I want to ensure that you have the understanding and clarity by the end of this session together to know exactly what to do with your money. Awesome. And that steps us into the Profit First framework. So in our last session, we spoke about why it exists and that it is based on the book by Mike Michalowicz, and how Thriday makes this easy and integrates the whole Profit First framework for everyone. But today we're going to go a bit deeper into, as I promised last time, a bit of the nitty-gritty around Profit First, and also give you an example, because we can talk about what it can do, but having an example that you can see the before and after can be really powerful. So any questions, feel free to drop them in the Q&A, and we'd love to hear your experiences too in the chat.
Awesome.
So we touched on this last time, and the Profit First formula flips this broken formula, which is the accounting principle formula, which says whatever sales you have, take away or pay for your expenses, and then whatever left over is your profit. So this accounting principle alone really leaves profit as an afterthought rather than a priority, and it ignores the human behavior that we have around numbers. If we are spending our money and we don't have our profit first, having a bank account that allows for us to put profit aside, then we're chasing our tail. We're never going to make the time. And so I wanted to start with the accounting principle alone of sales minus expenses equals profit is a broken formula, and Profit First is very much based on flipping that formula. Moving on to the next slide, we've got don't change your habits. We want to leverage them. So how many of you here make decisions by looking at your bank account? I'd love to know in the chat. I know I do. I love to look at my bank and go, yes, I can do this. No, I can't do that. I can see lots of I do's, yeses. Love it. Even a capital yes. Yes. Fantastic. We don't want you to change that habit. We want you to leverage it. So if you're already looking at your bank account and making decisions, then let's leverage that habit and create or implement a system that allows you to do that, but with a lot more clarity and purpose. Always. I love that, Mark. And I want to go just a little bit deeper, and this is around the behavior side of stuff. We've said that let's leverage the habit, let's not change it. It all does come down to human behavior. And this law, Parkinson's law, which is often spoken about when it relates to time, and that is whatever time you have available to you is the time that it's going to take to do something. And so what I mean by that is, how many of you have said, all right, I'm going to get this deadline done and I'm giving it 4 hours, and it takes you that whole 4 hours. And then another time you're like, I've only got 45 minutes and you somehow manage to get it done. I know that's definitely me, and I love a hard deadline.
100%.
What about you, Justin?
Yeah, definitely.
The same applies to money. So if you have one bank account where all of your money is sitting there, you are going to spend all of that money that's sitting there, because it is Parkinson's law. Whatever resources you have available to you is what you are going to spend. And we spend so much time trying to change something that is just human behavior. And so the whole Profit First framework sits on this human behavior and Parkinson's law.
Yeah.
How many of you?
Sorry, Laura. Yeah, tax is the big one here, right? Like if that's sitting in your account and you go, I don't have to pay that till tax time, then come tax time, how likely is it that that tax money is still going to be sitting in that single account? I don't know.
Not very. Not for me anyway. And I'd love to know how many of you have had this experience, either with the money that you have available all the time. And wouldn't it be lovely to not have to change that?
Mm. Yeah, 100%.
And this is what it feels like for me when I have one account, and I would love to know whether you experience this as well. Looking at the one bank account, thinking, should I start with advertising? Can I make this payment? When is payday again? Can I afford this? When is tax due? I need a pay rise. Oh, that loan repayment's due. When is that due again? Will I attend that business event? Oh yeah, that's right, internet and mobile. Can I upgrade my website? Should I hire some help? This is so normal to feel like that constant chatter of going, okay, I've got money in the account, but trying to keep track of everything that's going on. There is no clarity. And I'd love to know, Justin, have you experienced this?
Yeah, without a doubt. Without a doubt. I know back in the day when I had my e-commerce business, when we first started out, we had a massive pile of cash sitting under a rug in our warehouse, you know what I mean? Because we didn't have anything like this to sort ourselves out. No wonder that went awry.
And that's the thing, is that we can't keep track of it. It is too much information. It is complete mental overload. And that is a very easy way to stress about money and not make any good decisions and spend more time than necessary understanding what's going on. And so what this does is it moves away from this one bank account. And let's go a bit deeper into what it looks like. I'm going to really connect this also to the idea of food. And the reason I'm going to do that is that I'm a foodie and I love to eat. And I know that when I have a really big plate of food, I'm going to eat it all. It's the same thing here with money. And so it really is about the portion size or the purpose. So, Justin, have you ever tried to lose weight?
I have. And I've been known to use the mantra food is fuel when I'm in those periods of trying to lose weight. So yeah, it's money is a similar thing depending on the account that it's in. It can be fuel for a purpose, or it can be dessert. You know what I mean? It just depends on where you put it.
That's it. And I want you to just consider what you're like at a buffet. I know myself, if I'm at a buffet, I'm going to fill that plate and eat way more than what I actually need, versus having smaller plates with particular portions or purpose around them. And so what we're trying to do here is say that one bank account is where overspending happens, and that multiple bank accounts allow you to give purpose and portion sizes to your money, just as Justin had given the example of fueling things or the dessert. The other thing is implementing Profit First and having multiple bank accounts means that you're removing temptation. And as Justin's just explained, how many of us have money in our account knowing we have a tax bill in 12 to 18 months' time, and then getting that tax bill and not having the funds? This system of having multiple bank accounts will allow for this temptation to be completely removed. It's not even something you have to consider.
Yeah.
And so what I want to do is get into a bit more of the nitty-gritty. So we're saying small plates equals small portions. And if we look at different revenue ranges, And this is based on the Profit First book. And if you work with a Profit First professional, you can get really bespoke percentages based on your goals. But let's stick with this today. And that is, and the example we have is the 0 to 25,000 revenue range. But as you can see, that in these different revenue ranges, we've said that there's the real revenue, the profit percentages, the owner's pay, the tax, and the expenses. Because to start off with, these are the minimum bank accounts that we recommend that you set up with these percentages so that you can ensure that you're paying yourself sufficiently, that you have profit aside, that tax is covered, and that your expenses are not overblown. And so I want to just take a moment to talk about the percentages. The reason we do it as a base of percentage and not you've earned $1,000, put $100 there is that we have seasonal businesses. We have our ups and downs. We have our good times. We have our bad times. And using a percentage, it means that even if you have $10,000 hit the bank account or 100, you can still know what portion of it goes where. And it takes that fear response away from, oh, I'm not going to put $100 here because it's a small amount of money, or I'll catch up with that and I'll pay that back next week, which happens when we really look at it from a dollar figure percentage.
Yeah.
So the percentage is key.
Yeah, definitely. And, back onto habits quickly, I guess, if you make this a habit, we'll give you a checklist later on, but making this into a habit, and even like Laura said, if it's tiny little amounts, it won't matter. Like it'll make you feel good. It feels like a reward every time you follow this process, right? Because you put the money where it's meant to go, and then it's a complete weight off your shoulders. You don't have to think about it. It's a closed loop, right? Not doing this leaves an open loop in your mind, and you're always stressed about money. Doing this closes the loop.
That's it. And Karina, to answer your question, this is just the basic principles. If you have a product or a tradie business, then you need the materials and subs accounts. And we did touch on that in the last session, but we can go into specific information around your situation later in this. But I just wanted to acknowledge that I've seen that question. And so just bear with us as we go through and introduce the basic principles, and then you can build upon it from there with materials and subs and GST accounts and that sort of thing. Yeah. And so this is what it should look like. And I've stuck with the whole food premise because, again, foodie over here. But if your main serving plate is your income account, all of your income comes into here. And then 5% of all of that income goes across to your profit bank account. 50% goes to your owner's pay account, 15% across to your tax, and 30% to expenses. And these are your targets. Doesn't mean you have to start there. So I don't want people freaking out on the call going, oh my goodness, I've gone from, having all of the expenses and not enough money for profit and all of these other things. It's a staged process. You can start by going, okay, well, this is where I'm headed. What's the next best step? But again, let's start with the general principles. So it's very important that if you don't have these minimum bank accounts set up with some percentages going to each of them, then you will find that you're forever in that cycle of overspending, making decisions from the one bank account, and that stress and mental load that comes with it.
That's more.
And then the most important thing that I don't think is spoken about enough when it comes to implementing Profit First is that there is an absolute need to implement a rhythm. And what I mean by this, where I see the biggest mistakes happen when people start to implement Profit First themselves is that they do it in an ad hoc fashion. So some money might come in one day and then they might leave it for a couple of weeks and then do it at that time because they've got some time to do it. And then maybe a month later or every single day they're moving money. That is not going to help you. If anything, it will continue to feed that cycle of inefficiency, a lot of time trying to work out the clarity. Instead, look at when are your biggest expenses due, or when do you receive the most amount of money, or what makes most sense in your business, and stick to a rhythm. So if that's a weekly rhythm, fantastic. Stick to that specific day every week that you do your Profit First distributions and move that money from that income account to those different bank accounts. If it's fortnightly, same principle. If it's monthly, great, as long as you are implementing that rhythm. One, it cuts down the amount of time you're spending on making decisions, on moving money, on all of those things, but it also allows you to see what's actually happening in your business. If you are doing something on a fortnightly basis and you notice that all of a sudden, hold on, there's not as much income sitting in the income account, what's that telling you? Have you checked your invoices? Have the quotes been followed up? All of the things that we've spoken about in prior sessions, it's the indicator. It's the red sort of flag going, something's different here, to allow you to make changes and course correct before it becomes a problem.
Yep. And the good news is we're actually going to automate this soon, but we're not quite there yet.
And then I want to talk about this. So as part of the Profit First setup and implementation and framework is that you actually have a quarterly profit allocation as the owner of the business, and that there's a specific purpose or purposes for this profit account. The profit account should not be touched for a quarter. So it accumulates no matter what amount of money is coming into your bank account based on that percentage for that quarter. And then at the end of the quarter, you can use it to either put it towards a rainy day fund or your vault, to give yourself a profit distribution personally for all of the efforts and work that you've put into it, or to become that debt buster as well. And so there's a lot of things that you can do with your profit account. And I know that we're going to get the objection of, but how can you put money in a profit account if you're not yet profitable? Start with 1%, because that 1% is not going to drastically change all of the other things that are happening in your business. But again, you're leveraging that behavior and mindset to say profit is important. And as soon as you have those funds sitting there and seeing what is possible, that is absolutely worthwhile doing.
Yeah, a lot of this is psychology, right? Like it's just putting that lump sum payment onto a loan after you've saved up for a quarter, or putting half of that profit amount or whatever to a weekend away or something, gives you a reward for all of the hard work that you've done, to get you into a position where you can put that money aside to begin with.
That's it.
So, it's all about rewards.
And Tanya's shared in the comments that the profit account is what has enabled them to invest in property, and they've only been putting 1 to 2% away. So that's freaking fantastic, Tanya. Congratulations.
Yeah.
And as I touched on, it is the way to crush debt, to freeze it, and to really get ahead. And so the idea being that you pay your recurring debt amounts from your operating expense account. So any payment plans, any loans that with the minimum amounts that are due come out of your operating expense. And then with your profit account each quarter, you can use up to 99% of it to do the snowball effect, which is another lump sum, just like Justin was explaining. And you'd be surprised how quickly you can actually pay off your debt using this methodology.
Yeah, the snowball method is super cool. If you haven't heard of it, look it up. Basically take the smallest debt first, pay it off. Doesn't really matter if that's the lowest interest rate or anything, just the smallest debt, get rid of it. And then the amount that you were using to pay off that small debt, use that amount to then pay off the next debt. So it's the minimum payment on all of your debts, but put all of the extra money into the smallest debt first, and then the next smallest, and the next smallest. Then all of a sudden, one day your debts will be gone faster than you thought they would have been.
That's it. And then I wanted to touch, again, utilizing Thriday and Profit First account setup. And this will speak to Karina's question around other accounts. So if you do have GST that's payable, then having a separate GST account with the GST percentage is important. And that happens first, just like your profit, so that you are paying for things that are not your money. And the same applies to materials and subs. Whatever income comes in goes off to the GST, materials and subs profit, and then you pay yourself, you pay the tax, and you pay your operating expenses. So this is a great little snapshot of what the bank accounts can look like.
Yeah. And in Thriday, all of the tax calculations and GST calculations happen automatically. So you don't actually, you can still use the percentages if you want to, because they're a great guide and they actually give you a little bit of a buffer. But if you want to use the exact amounts, then it's literally that calculation of tax right there and then is how much you should have set aside in your tax account, and same for GST.
Awesome. And so the steps to implementing Profit First, the first step is you need to know where you stand financially right now. And that is looking at, with this framework, how much are you paying towards GST? How much are you paying towards tax? Is it meeting your obligations? How much are you paying yourself? Is it in line with the percentages that we've outlined today? What do your operating expenses look like? And do you have any profit that's being, accumulated in your business? And really having that line in the sand going, okay, so this is where I'm at, because you can't make any changes if you don't know where you currently stand financially. So that first step is crucial.
And what do people need, Laura, to do this, to understand this? Like what would you do? Would you download the CSV files from all your existing bank accounts, or would you spend 30 days journaling your expenses? How do people know the answers to this?
There's a few ways to go about it. And the first would be, and where I like to start with everyone, is look at a month first. A lot of us are really good at knowing what our monthly recurring expenses are and what our average income is and what we take out of the business on a monthly basis. If the idea of looking any further than that's feeling a bit too overwhelming right now, just start there. Do you know what I mean? Like, it is looking at, on a monthly basis, what income do I have? How much GST should I be putting aside? Do I do that or not? Yes or no? Do I have any profit? Have I paid any profit? Yes or no? Then what am I spending on owner's pay, if anything? What are my operating expenses looking like? And then looking at it as a percentage. Are your operating expense, if your operating expenses are $9,000 out of the 10,000 of total revenue that's come in, it's a really high percentage. So already you have that snapshot. The other option is that you can grab the book or download the instant assessment from, if you Google, you can do it from our website, or you can, a number of our Profit First professionals have this available, and it will talk you through it. If you have a really seasonal business where you can't easily go on month to month, it's like this, then look at the year. And what I like to look at is, if you are utilizing something like Thriday, then you can really extrapolate that out and say, this is the average. Or you can get bank accounts and highlight all of the things that are income, all of the things that are expenses, et cetera, et cetera. So it really depends on which way is the least overwhelming and will be the action that you take.
Yeah, cool.
And then the second thing is knowing your target income goals. And so and what I mean by this is, we need to think about what we want to take away as the owner. We need to think about what revenue we need based on these target allocation percentages. What does that look like? So knowing that, you can then see the gap and the gain to either increase revenue or move your money to these different purposes. And then the third thing is really knowing your expenses. And this is where you can make a huge difference almost immediately. And that is, I believe, and what I have seen over and over again, is that we can reduce our expenses by 20%. Yes, by 20%, and not compromise on quality or outcome for clients and customers, and still run a very efficient business. And so spending some time looking at what you're actually spending your money on, and are they truly helping you provide the service or product for your client, will help you get closer to these target allocation percentages.
Yeah.
And then the fourth is understanding your pricing. So if you know where you are right now, you know where you want to go with your income goals, and you've sorted out your expenses, what is that gap? And with your current pricing, does that make sense? Do you have to have 100 new customers to make that revenue and work really, really hard? Or could there be a tweak in your pricing or profitability that could bridge that gap a lot sooner? So the pricing, doing the instant assessment in particular, will give you a very clear indication if you have income, less your materials and subs, leaving you with not much money left over, then there's potentially a pricing problem there for you. And so knowing where to look is really key.
100%. Yeah, a mate of mine's going through this process at the moment, and he's 80% of the work is only creating 20% of the revenue, right? Which is crazy. So how do they invest 80% more time into the 20% of actions that are generating 80% of the revenue? You really need to split things out and think about them in that kind of way, because you might find you have a lot more time on your hands for a fair bit less effort. It's all about leverage.
Yeah. When have you looked at potentially increasing prices versus getting more customers? And how many customers could you potentially lose at the higher price point and still be ahead? Like, that's a pretty amazing thing to look at.
Yeah.
And then the fifth step is to understand the profit first percentages. How do they fit your business? Where do you fall in the revenue ranges? Are you a product or a services business? If you're a product business, making sure you have the materials and subs accounts, so for all your product costs and that sort of thing going there. Is it that you're actually not really working that much in the business and your team is instead, so therefore, you know, your percentages might need a bit of a tweak and a change? Or it could be as simple as, let's start with where I am now, and the next step would be to increase the profit percentage from 1% to 5%, and decrease operating expenses by that 4%. Understanding your percentages is really, really important. And then the sixth step is to set up the accounts, and that's where Thriday comes in. This has been such a pain for us profit first professionals for so long. How long it takes to set up the bank account? Do you want to tell us about it, Justin?
Yeah, look, in the past, you literally needed paperwork and to go into the branches to set up each and every different account. And I know I was talking to Katie the other day from Profit First for Tradies, and she said she's having a lot of problems with the banks at the moment, and getting a lot of her clients setting up multiple accounts. So we saw that as a problem. And with Thriday, you get your first bank account, takes about 3 minutes to register online. And then if you want to set up multiple accounts after that, you literally just click an add account button, give it a name, and away you go. And you can set up to 9 bank accounts and distribute your money according very specifically to Profit First.
Awesome. Yeah, I love it. When I realized how easy it can be, Thriday has just done that so well. And we've spoken about the different bank accounts and all of that prior, but setting up the Profit First bank accounts, if that's where you're at and you're like, oh, it's been really hard, Thriday has an option for you.
Yeah.
And then step 7 is setting up that distribution rhythm. So making sure, looking at when it makes sense and sticking to it. I know that sometimes that can be really hard when we're busy, but if you put your focus once a week for 20 minutes to do this, you're going to see so many changes in your business.
Yeah. Block it out in your calendar.
That's it. All right, so now I promised an example. I love a good example. And so here's an overview of a business that I have worked with, and they're a service-based business. They've been in business for about 2 years. The owner's working more than 40 hours a week, so is feeling really quite burnt out. They have a VA, but no other team. The owner, when we looked at it, was being paid below the minimum wage, which is a very common thing that I see. The revenue goals had no real basis. It was oh, well, if I make X dollars, then it'll all work out. Whereas when we looked at what was needed, it was very different. And then they had profit according to their profit and loss. So that person had the talk with their accountant, who's like, congratulations, you've made a profit. And they're like, where's my money to pay the tax bill? We've all been there. We have all been there. And they didn't really have money in the bank. It was still very much feeling like that feast famine cycle. The money come in, it all go out. And there was they're feeling like there was nothing to show for it. So I'd love to know how many of you can really resonate with this situation, because I know I've been there. Awesome. So then I want to introduce you to the business owner, which is on the next slide. Fabio, yep, I can see that. So this person was a family person. They had 3 kids at home, aged between 5 and 14. They wanted to work only 30 hours a week in their business because they wanted to obviously be with their family. They needed to pay themselves at least $70,000. And the reason for that, is that they'd spent the time to look at, well, if I contribute to our lives personally, what does that look like from the business? And so you can see already that gap between what they were paying themselves, which was below minimum wage, and what they actually needed. And their priorities are family, travel, and less stress. I know that they're definitely my priorities. What about yours, Justin?
Yeah, 100%. And, we see this from so many businesses, again, in a lot of the research that we did to sort of get Thriday up and running. 70% of business owners don't want to grow at all costs. They just want enough money to travel, spend time with their family, and stress less, not have to worry about the bills, right? Growth is, everyone markets to you as growth, but it's not about growth for the majority of people. So this paints that picture exactly.
Absolutely. And so these were their goals. So as I said, you need to know in part 2, when we're speaking about it, you need to know what your goals are as the owner of the business. And so this person wanted to work fewer hours in their business. They wanted to increase revenue because they knew they had to do that in order to pay themselves more, which is the third point. To have the right team to support them. And when I say team here, it does not mean that they're looking to suddenly expand to have all of these employees and stuff, but potentially outsourcing certain things and not having to do it all, which was the fact for them, working the 40 hours a week and having the cash in the bank when they needed it. So they could actually sleep at night. And this was probably the biggest goal that they had.
Yeah.
And I know that, and so you can see here, this example is showing you exactly what we've been talking about in the previous series as well, to know where you're at and your goals. So let's talk about the figures before Profit First. And so we've done this as a snapshot of, was that when I said to you, step 1, know where you stand right now. This is how this person was. They were earning $160,000. They were paying $20,000 towards GST, which left them with $140,000 to do everything else in their business. What they were actually doing at the time was spending $118,000, the bottom one, operating expenses, on their business, which was 84% of their real revenue. They only had paid about $2,000 towards their tax, which was a problem because they got the, well done, you've got profit, here's the tax bill, and they only had about the $2,000 to be able to pay it. They were paying themselves $30,000, so there's a big gap between where they want to be and what they're currently doing. And they were running at a negative cash profit of $10,000. So that means that they were overspending by this amount in the year to kind of keep things afloat. And I know that we've all been there at some stage. Stressful situation. What this told me was what needed to happen. They needed to decrease their operating expenses, increase their owner's compensation or their owner's pay, increase their tax because their profitability on their profit and loss was showing a lot more than what they had in the bank, and putting some profit aside. And so through looking at that, what we realized is that top line revenue, or that revenue goal, and again, this is what I mean by having a revenue goal that it has basis, was that they needed to earn up to, if they earned $220,000, look at what it does with the right pricing. So we looked at pricing together. We looked at separating the percentages in a way that made sense. So we decreased the operating expenses hugely, because what we actually found is that there were so many different subscriptions, investments in growing the business or creating revenue that actually wasn't returning that investment. They were paying too much for their VA who wasn't actually helping them do the things that they needed to do and reducing that. They ended up, by the end of 12 months working together, being able to reach their revenue of $220,000, putting the $25,000 aside of GST that was applicable to them, leaving them with $195,000 in their bank account. They then had the operating expenses, which were up from the 30%, but worked well in this case, had money aside, which was actually too much tax for what they needed to pay. And they surpassed their owner's pay. From that $70,000 that they wanted, they could realistically pay themselves $95,000, and they had 3% in profit. So this is just an idea of what implementing Profit First can do. And it's not a silver bullet. You definitely need to start where you are, make the changes slowly, look at your pricing, understand your expenses and make changes over a period of time. But this is like, look at the clarity. She could then look at the bank accounts and go, okay, I have money to pay for this thing. Yes, I can pull this money out for myself. No, I'm not touching that tax and all of the things that come with it.
Yeah. And do you think she's ever going to change her habits once she gets into a situation like this?
Never.
Life's just way too easy.
That's it. So this is a great example. And I have a challenge for you. We both do, don't we, Justin?
We do. We love a challenge.
That's it. So if you don't have Profit First implemented yet, start today, even if it is by opening that profit account. Set it up with Thriday. If you're stuck on the bank accounts and that sort of thing, just do it. Start somewhere. We also have Profit First professionals that can help you do really specific implementations as well. And if you're already implementing Profit First, look at what you've learned today and tweak those percentages. Where could you move 1% from your operating expenses to profit, or whatever may be applicable to you? Where could you look at your pricing that would bring in more revenue to mean that you can get closer to your percentages that you need to do? Choose one thing, tweak.
Yeah, 100%.
And then we promised that we'd have a weekly checklist.
Yeah. So this is super cool. You can scan this now, or you've got a couple of minutes and you can download that checklist and do those things each week, or even if you choose to do them each month, get into that habit and just make sure that they're there. You know, save those items as bullet points, put them in that calendar entry, so you remember exactly when and what to do and how to do it. So yeah, it doesn't have to be difficult.
Absolutely. And Michelle's put the link into the chat as well for you to download there if the QR code is not your thing. What we have done with this checklist that's a bit different is we have based it on the Profit First principles. We've said all of the sales things, here's your checklist for that. Profit. If you think sales minus profit equals expenses, what are you doing there? And then expenses. And we've also put a couple of monthly bonus tips as well down the bottom of each of the checklist pages that could really, if you stick to those, will make a huge difference to your financial success and efficiency.
Yeah, 100%. Next week, we have part 4. We're both pumped about this one. We sort of step away a little bit from the money side of things and get into the efficiency things. How do we save time and how do we make life a little bit easier day to day in the jobs and the work that we do? So some tips, tricks, and tools that we use in our businesses to work as efficiently as possible. We'll run you through some of them, so it should be exciting.
Yeah, I can't wait. It's going to be so great. So stick with us because I'm excited to learn from you, Justin, because you seem to be the king of all the tools.
I don't know about that. I dabble.
Awesome.
All right. Have we got any questions?
We do. So I can see here in the Q&A, and Michelle, if you just want to let me know if I've missed anything. Does Thriday help with the bills percentage calculation?
We're going to automate that soon, but we don't help with the actual calculation of it right now. It's still up to you to, first of all, follow the steps that Laura put forward to understand what your percentage is going to be for your operational expenses. And then obviously the account is easy to set up, and then you just need to do that transfer at that sort of schedule that you set for yourself, whether that's weekly or monthly. But the good news is the setup of the Profit First accounts is going to be a one-click setup very shortly. We're in the process of developing that. And then the next phase of that project will be to automate the target allocation percentages. And again, you'll be able to look at all of your accounts on one screen, see and define the percentages for each particular account, hit save, and then as your revenue comes in, it'll be dispersed to those different accounts automatically based on those percentages. So you won't even have to think about it. That weekly recurring meeting you set for yourself can be designed specifically to have a look at your pricing, or to tweak your expenses, or to understand where you can pull a little bit more profit from, or to improve efficiency in some way, shape or form.
Beautiful. And we've got a question here. We've had an attendee miss the first 2 sessions. Are there any recorded videos that they can
There
watch?
are. I'll send them out again. I sent them out last week to everybody, but apparently a couple of people didn't get them. I know a bunch of people did because they replied back to me. But yeah, give me some time to, at the end of this recording, I've got to trim up either side of this video and save this one to the playlist, and then I'll send them all out again to everyone who's registered.
Awesome. And of course, we have the question of when will Thriday be ready to be used for companies?
We're still a couple of months away from companies, but we are working very, very hard with our banking partner at the moment, which is Regional Australia Bank, to be able to onboard companies digitally. So the reason it's taking so long is companies are a bit of a different beast than sole traders, and being able to identify and verify that this particular business belongs to this particular person, and then this director is also part of it, and all that kind of good stuff, has been a little bit more time consuming than we would have liked. But we've got so many companies chomping at the bit to use Thriday, and believe me, I want it more than anybody else.
I love that. And will that be the same for trusts?
Yeah, so trusts might be a little bit after companies specifically, but we are hoping to do them all either at the same time or, not far off one another, but I'm just not 100% sure
Awesome.
whether that's going to be the case or not. So I'm not going to give a definitive answer.
Great. And Tanya has just come back with some more clarification, saying, to give clarity on what I mean is that I find it very time consuming to keep on top of our regular bills when they're due, and increases that often get missed in the calculation. I have it in a spreadsheet, and it would be great if there was some sort of auto calculation to ensure that this figure is correct and up to date.
So I'm not sure about the auto calculation part you mean, but what we have a feature called Bill Manager in Thriday, where whenever you get a bill, you can scan it the same way you can scan receipts in Thriday, and we'll read all of the details for that bill, and we'll schedule that bill for payment on the due date, right? So then you'll have a list of bills sitting in your Thriday account ready to be paid on the due date that you approve, and you're good to go. We don't calculate how much the total amount for all of those bills is at any given point in time, right? If that's what you mean, but it certainly helps with not having to think about, I guess, setting aside 3 or 4 hours each week or a day, a month, with all of your bills next to you, going through each one and entering the BSB and account number to pay them. Like, it's literally take a photo of it with the app, schedule the payment in Bill Manager automatically, and away you go.
Awesome. And Tanya, just from a profit first perspective, a little tip, your percentages should allow for some increases, and they should be reviewed on a quarterly basis. So you should not actually need a spreadsheet to keep track of what the percentage of your income is. And this is actually where working with a profit first professional helps with this. They know the ins and outs and the nuances and the extent. This is probably the more advanced versions of profit first. So yes, that I would say look at potentially increasing that 1 or 2%, reviewing it on a quarterly basis, and you'll probably find the problem disappears.
I actually really like that idea, though, to be able to programmatically identify bill creep, if you like, or look at particular suppliers to understand whether the amount that you're paying them each month is increasing beyond what you kind of expect, because I understand it's going to be hard to stay on top of it when you got that much coming in.
Yeah, absolutely. And I can see here that there was a question as to whether you can implement profit first from the very beginning as a business, so like a startup. And to answer that question, this is actually the best time to implement profit first, because it means that you can start to make really good decisions as to how much you can and will spend on things, what the revenue is that you need to bring in, and start that habit of putting the money to the different bank accounts and having that clarity from the very beginning. So yes, it works at any stage.
Yeah, and you might not, of course, right in the very beginning, you're not going to have enough revenue to cover all of your expenses, but you're going to start off with like an operating capital sort of amount of money, right? And then work backwards from what you need in terms of your expenses, your expected revenue, and then the expected sort of tax and everything that you need to pay, I guess, to start making use of that operating capital, rather than just putting it all in an account and using it for whatever you think you're going to need it for.
Yeah, absolutely. So that was the other question that I saw. If anyone else has any other questions, there was someone in here, Maggie, who asked about whether there was still the Profit First special pricing for Thriday, because we...
Yeah, 100%.
Beautiful. And what's the best way for them to be able to access that?
I'll share a link with everybody.
Beautiful. Fantastic. So we'll do that with the recording for you. So that's fantastic. And I think that we have answered all of the questions. I know that Profit First can seem like a lot, but just start with step one and move on from there. And there's lots of support available to you if you would like some help.
Yeah, you guys have some exciting stuff coming up, Laura.
We do indeed. So we've got to answer another question that we had, which is working with a Profit First professional. If you're a business owner, you can work with a Profit First professional at any time, and that's via our website. And we also have, for the micro businesses that are not yet at a stage to be able to work with a Profit First professional, we have a DIY course becoming available through Thriday to you. So that's pretty exciting stuff.
Awesome. Super exciting.
Fantastic. Thanks, Justin. I think that's everything. And thank you everyone for being here.
Awesome, Laura. I learned a bunch of stuff in there as well. Thanks so much for taking us through that and getting into the nitty gritty.
Anytime. This is my jam. And we'll see you next week to listen to all of Justin's gold nuggets around.
I hope you're bringing a few too. I hope
I promise I will.
Yeah, awesome.
Awesome.